Hello, it's Jonathan Wellham of Rocklinc Investment Partners, and it's March the 22nd, 2020. And what a world we are now living in. So I wanted to, because of the circumstances, come and give our clients a update in terms of Rocklinc, how we are positioned, and where we're seeing some opportunities in terms of the stock market. First of all, let you know I'm coming to you from my bunker. I have this bunker here in my home, my basement. And just to let everybody know that if I can't make it into the office, where we have actually been going to the office, if I do have to hang out at home, I've got a gym and I can continue to exercise and look after myself and stay healthy and strong despite any potential quarantining. I don't have to worry about going into a gym with other people there. So I love my home gym here, and so everyone at Rocklinc is doing very well and healthy and strong, and we're focused on your portfolio. So let's get into the presentation here. There is a slide presentation. The second slide is a disclaimer, which we always put up there to keep the lawyers happy, and it's important to make a quick perusal of that disclaimer. The third slide, I've just put up a couple of quick quotes there, I think, that are helpful. It's important always to have some perspective when we go through difficult times. I've entitled this presentation, "An Anchor in the Midst of the Storm." And so here's a couple of quotes, and you probably have them up there on the screen there before you. And you can see that the first one there is from Thomas Paine, one of the founding fathers of the United States. And he says, "These are the times that try men's souls. Tyranny, like hell, is not easily conquered, yet we have this consolation with us, that the harder the conflict, the more glorious the triumph." And that's true whenever you go through difficulties. And the last quote I have there from John Adams, another founding father of the United States, says, "People and nations are forged in the fires of adversity." And so even though we're going through some adversity now, we want to make sure that makes us stronger and more resilient and more focused on what we need to be focused on and what's important in terms of investing and also in terms of your life. Okay, so in the next slide, we just give you a quick update of what I'm going to go through here. I'm going to talk a little bit about business continuity plan in terms of Rocklinc, and that's also very important for you to know. The current market statistics, what's gone on year to date, it's fairly amazing to say the least, and I know most of you are well aware of that. Third, just a quick update in terms of Rocklinc's performance year to date. That'll take us up to March 20th, last Friday. And then key points of strategy, how we're preparing, what we're doing, how we're positioning clients' portfolio, and then just a couple of notes in terms of anchor in the midst of the storm. So in terms of Rocklinc's business continuity plan, they call this the BCP, I just want to point out a number of things that you'll see there on the slide. Number one, the Rocklinc team is fully operative. All of us are working very hard and diligently. We can work from anywhere in the world. All we need is a computer or iPhones, and away we go. Each of us has our own home offices. We have been in our own office all last week, and we're anticipating continuing that this week for the next little while, unless they tell us otherwise. All client information is custody at the National Bank, and that's accessible online through National or through Index, which is our portfolio management system. So wherever we are, we have full access to all of our client accounts, and there's no problem in terms of keeping up with everything that's going on. Myself and Doretta, we also have access to the trading platform, so we can make changes and invest in the portfolios anytime that the markets are open, when we obviously have liquidity. We can be contacted anytime by email and phone. And I just point out that all of us, in terms of Jesse, Andrew, myself, and Doretta, our iPhones, both two numbers on them, both our personal cell phone number and also our business number. So if you call the business number, it comes directly through to myself or one of our other employees. So we are completely wired up all the time if you need to track us down. And when we're not in the office, we've sort of planned that if we aren't in the office, if we have to stay at home, then we're going to make sure that we're doing 1 to 2 teleconferences, FaceTime kind of meetings online, so we keep up with everything, of course, and push the emails back and forth to each other. So basically, it's business as usual in terms of what we're doing. Now, the next couple of slides, I just want to talk about the current market stats. And these are, again, year to date as of the end of March 20th, so last Friday. We're doing this, I'm filming this on the 22nd, Sunday, March the 22nd. You can see on the first slide there that basically it has been a bloodbath, and most of these negative numbers really have occurred in March. So most of them have occurred in March. So year to date, the Dow Jones, as you can see, is down 32% plus. The NASDAQ down about 23%. The Dow Jones has been hit a little bit more because of things like Exxon in the oil patch, or Boeing, which was a very large component. Used to be an over $300 stock, now down to $100. I don't have to tell you what's going on in air traffic, so that's hitting Boeing hard. And that's hit the Dow Jones inordinately as a greater percentage. The S&P 500, as you can see there, down 28.66%. The S&P TSX, that's our good old Toronto market, down 30% plus year to date. The Russell 2000, I put that up there because that's really the smaller capitalization companies, smaller businesses, smaller companies, not the big, Fortune 500 companies, but the smaller cap businesses. That's down close to 40%. Again, it's been a bloodbath in the smaller companies. The Nikkei, which is the Japanese market, is down 30%. The stocks index in Europe, which should give you the broader European exposure, is down 32% there, you can see. And the FTSE 100, which is the UK market out of London, England, is down 31%. So basically, you can see it's pretty uniform. You're talking 30% plus drops year to date, which is substantial. Most of that taking place, well, virtually all of the negativity, the net negativity, taking place in March, and we're not even through March yet. So the next slide, slide number 7, we can see that gold, just a couple of commodities here, gold's down about 2%. It's really hung in there well. And when you consider that the Canadian dollar is down 9% plus year to date, actually gold in Canadian dollar terms is up about 7%. Now the gold stocks have been so-so. They haven't been as strong, and I'll talk about that later, but gold has been very strong, and it should be. This is a crazy market, and what's coming down the pipe in terms of the monetary situation, which I'll talk about in a few moments also, justifies in my view, a much higher gold price. Now silver's been whipped around. It's down close to 30%. It is a very volatile asset, but no fears there. Silver is an essential metal. It's a precious metal and high demand, and we're seeing physical shortages in both gold and silver now, so we'd expect silver to really bounce back nicely. Crude oil, you can see there, is down around 68%. It has been crushed, not only because of the coronavirus and the situation that, it's taking people off the road, so it's taking away demand. There's also this price war you might be aware of between Saudi Arabia and Russia. So they're continuing to pump oil at the same time that the demand for oil is dropping. So this is creating a tremendous glut of oil on the market, and the price is just plummeted. And we're so thankful that that's an area that we have not been directly investing in, although that's one of the reasons why our dollar is down so much. Copper, which is down about 22%, is a good indication of weakness in the economy, which we don't have to tell you about. And then the last point there is just our Canadian dollar, which is down almost 10% against the US dollar year to date. So around 70 cents, 69, 70 cents. Don't be surprised if that goes further down. But again, I'm not making currency predictions. I learned a long time ago that's not a good way to enhance your reputation. On the next slide, just a little bit about Rocklinc. How have we done in terms of the overall market year to date? On the top one, you can see that our composite portfolio, that'd be across our book of business, we're down about 12% year to date. With people with a bit more growth portfolio, so the higher weightings in equity, we're looking basically at 75, 80, 85% equity. We're down about 15% in those portfolios. And then people who are more conservative, we've got some people with much less equity exposure, older folks, people that just don't want to be in the market as much. We're down about sort of 6 to 8% in those portfolios. So we've gone down a much less than the market, which we're pleased about. But again, I don't like going down at all. And so we're fighting hard to be able to protect where we're at and also come back and see opportunity so that we can make that up in the next little while. Now the next slide, I just put this up because to me it's a reminder of the swings that can take place in the market between financial assets and hard assets like gold. And so it's the Dow gold ratio. Now I keep an eye on this. It's interesting because from time to time, every sort of 20 years, 25 years, that Dow gold ratio can get as low as 3 to 1, even 1 to 1. Which means that the Dow would be priced at the same price as gold. Now, I'm not suggesting we're going to go back there, but if you look at this chart, you can see the wild swings. And over time, it's amazing how we typically retrace and get back to certain averages again. And so typically that if you run a chart, if you run a line through there, we should be more like 10 to 1 maybe. We just recently reached 22 to 1. And now we're back to 12.5 to 1. And I'd suggest that it's highly probable, given what's going on in the market, that that ratio could go back to 5 to 1, even 3 to 1. And if that's the case, it doesn't mean the Dow necessarily goes down a lot. It could, but it also means that there's a lot of upside for gold because the financial assets have just gotten out of whack with hard assets. And so we're watching that, and it's a good bullish sign for gold, precious metal exposure, which we maintain in the portfolios. And they haven't been great performers; they've been okay performers, but we have good expectations going forward in terms of that. The other one is the gold, slide 10, the gold oil ratio. This is also interesting to watch. We've never seen it at 75 to 1. So if you take the price of gold, an ounce of gold, and divide it by a barrel of oil, it is now 75 to 1. Typically, it might average in the 20 to 1. To see it 75 to 1 is shocking. Now, it indicates a very depressed oil price. And I'm not suggesting this ratio is going to stay 75 to 1 or probably work its way back to 20 to 30 to 1 or something like that. But one thing I want you to note is that with oil so low, this is a bonanza for miners and for mining companies, especially these gold companies where we have some exposure through the royalty companies. Because 22 to 28%, let's just say 25% of the input cost of mining is the energy cost. And so if energy is at rock bottom, that means the costs for a lot of these miners have just dropped precipitously. At the same time that the commodity like gold is actually holding in very well, especially if you price it in non-US dollars, it's really well. So the margins on a lot of the miners and a lot of the development companies should be enhanced significantly going forward. So this is also a big plus for some of the areas that we're investing in. So let me just shift over to key points of strategy. This would be slide 11. I want to continue to go through here so the presentation is not too long. You can see that patience, waiting for the fat pitch. We are being patient in this marketplace. Number 2, we are in uncharted waters. Let's not make any mistake about it. These are uncharted waters. We've never shut down large swaths of the economy before, and we don't know when this will end. And so therefore, rushing into the markets, we don't believe is a good strategy. Nibbling a little bit, being very careful, patient, repositioning positions. That's what we're doing now while we're watching this unfold and see what's going to happen. Number 3, central banks' response continues to be unprecedented. The level of money printing will be historic. I mean, it's going to be just going to shock us when we look back on this. It will make, as I say here, the Roman Empire in their dying and most decadent years look financially prudent. We're going to print so much money to keep this thing afloat. It is shocking. It's beyond shocking. And so we want to be very careful because of the potential dislocations and problems that this is clearly going to have in the market over time. Number 4, governments around the world are going to run massive deficits, and I underline massive. U.S. deficit could exceed this year $4 trillion. easily exceed that. They're already running one and a quarter trillion. They're going to add another $2 trillion to their spending, and that's just the beginning. So the U.S. deficit could be more than $4 trillion. That's astounding. The Canadian deficit, Trudeau's going to spend $82 billion. He's already running $30 billion deficit. Look at $150 billion federally. I wouldn't be surprised if we got as high as $150 billion federally, which is just shocking. It's off the charts. Now, whether they should be doing that or not is a whole other question I'm not going to get into, but it does have financial implications and where we're going to invest and how we're going to approach this market. The next slide, key points of strategy here. Just think about the Federal Reserve. This is the central bank in the United States. Just think about what they're doing right now. And I've just listed these quickly for you. These are the things that they've initiated, policy initiatives, just in the last 2 weeks. First of all, they've cut interest rates to 0.15 or virtually zero. They've launched $1.5 trillion repo program. This is to help bail out and keep bank liquidity in the mornings in the marketplace between the repo market. So basically, in essence, it's printing money. It's allowing free money to get into the system to keep liquidity there. 3, they've launched a $700 billion QE program. That's quantitative easing. And to me, this is going to grow. This means they're going to print at least $700 billion of fresh money and put it into the system. They're going to buy all sorts of different securities with that to support the market. But given the deficits that the U.S. government's going to run, they're going to print a lot more than $700 billion. Anyone who believes that they're going to do $700 billion, believes in mythology, because it's going to be a lot higher than $700 billion. They're going to have to basically monetize most of the debt and the deficits that's coming down the pipe here by the U.S. government. They're supporting the commercial paper market. So if the commercial paper market locks up, that's the market that supports a lot of short-term borrowing for corporations. They're supporting it. They'll just step in and buy it. So they create liquidity, which is important. They've opened the discount window for the big banks. They've opened the dollar swaps for international central banks. That means that central banks need dollars. They can get the dollars from the Fed, and there is a shortage of dollars. They're supporting and backstopping the whole money market funds business, so that no one, the money markets can't break the buck, they call it. You can't get a loss on a money market. Potentially, you could lose on a money market. And so what they're doing is they're backstopping the money market so that there's security and people feel safe in their accounts in terms of money markets. They're plugging, and the bottom line is they're going to plug the drop in the GDP. What they're talking about here is, given this coronavirus and given the slowdown in the economy, most of them are estimating this is going to take 10% at least out of GDP. So what are we going to do? We're just going to fill that 10% with debt and deficits, and we're just going to print the money up to 10%. And the G7 basically have agreed to this, the big nations around the world. And again, I'm not arguing whether they should do that or not. That's another issue, and don't have time on this video. But that's what they're going to do. And so we need, again, to have a response to that from an investment perspective. And so this is going to be a big issue. And then lastly, I just have point 9 here. The G7 nations seem to all agree, 10% of GDP they have to fill. And some of the governments are even going to helicopter drop this, as we're seeing in the United States. They're going to give $1,000, $1,200 per person, $2,500 per family. Those families, if they're not earning, I think it's over $75,000. But basically, they're just going to send out checks to people. And so this is what you call a helicopter drop of money. Do they have that money? No. Where does the money come from? They print it. So this is a big issue. So the next slide I just put on here because it just reminds you that we already have a debt problem. We talk about this a lot with our clients. There's already a debt problem. This coronavirus and the spending that's going to have to be incurred to support the economy, because we've just basically shut it down for the last week or two, and they're going to continue to do this going forward. This means that the accumulated debt is going to just skyrocket. It's going to jump in large numbers. And so this is a problem. So what are the key points of strategy, for us at Rocklinc? What are we doing? How are we positioning going forward? This is uncharted waters. It's highly unusual circumstances, to say the least. These are unique times that we're living in. So here's what we're doing. First of all, we're trying to keep cash reserves in account. And that will vary by client, by age, by risk tolerance, and so forth. Second, significant US dollar exposure to hedge ourselves against, the Canadian dollar and weakness there. That's already helped us a lot. I think it could continue to help us because our dollar does have the risk of, dripping lower, if you will. Minimal commodity exposure. We have very little in commodities because they're economically sensitive. The only commodities we like to own are the precious metals because they're monetary substitutes and they protect you against monetary, damage. A problem in terms of purchasing power, and they protect us against low interest rates and inflation and also deflation. They protect you on both sides. Minimal exposure to leveraged financials, banks and life insurance companies. We have virtually nothing in our portfolios. A little bit of TD Bank in portfolios, but we don't want to be in the leveraged financials in this market. They could drop an awful lot. I'm not saying they're going to, but they're much more risky in this sort of environment. Go where the puck is going, as Wayne Gretzky says. Go where we think we need to be in advance. You can't go when everybody else is going at the same time. And so we want to be where the puck is going. Protecting purchasing power from this monetary insanity is absolutely essential. How do we protect your investments from being able to, to buy and to purchase what you're going to need over the next number of years in terms of living? That's what investments are for. Key points of strategy continued on the next page, number 7, significant exposure to precious metals. I think they're undervalued and under-owned, and we're seeing that, the strength in the gold market, the strength in the silver market, especially the physical market. People are trying to buy the physical, they can't get it. You're paying heavy premiums above spot to get it, spot price. Overweight in hard assets like infrastructure, overweight in businesses that are essential, and price setters, not price takers. Include, water businesses of which we own, some technology companies, software companies that we own. Minimal exposure to consumer discretionary because consumers can turn the spigot off, if you will, but trying to focus more on consumer staples because consumer staples you have to continue spending. Continued on key points of strategy, number 11, we're freed up some cash for retired clients to create extra buffer to weather the volatility. We've done that in a number of portfolios, just create more of a margin of safety. We're nibbling on some companies that have been hammered into liquidation and are too cheap to pass up. So we continue to do that. We maintain our hit list of companies that we are ready to add to our client portfolios at the right time and at the right price. And then we're spending a lot of time on this. And then patience. The numbers from the Wuhan virus or the coronavirus, whatever you want to call it, they're going to get worse over the next 2 to 3 weeks as we detect more and more carriers within our country, in the United States, around the Western world. This has been going on probably since October, November, and we didn't know it. Now we're doing all this detection and finding it amongst us. So for the next 2 to 3 weeks, I would expect the numbers to be really bad in terms of who's carrying it, the number of carriers, the death rates are going to continue to chug along, and so forth. Until all of what we're doing now should start to help significantly going out of 3 weeks or so, 3 weeks to a month. And so we're just being patient as this unfolds, and we don't want the press and the government. Don't let the press and the government terrorize you. All this news and the headlines are brutal if you look at it every day. Be careful and stand tall. Don't be influenced completely just by headline information. We can expect this to get worse for the next couple of weeks, and then it will run its course at some point. But we want to be careful and patient. We're not going to just jump in with both feet until we can see a little bit more clarity in terms of the horizon, what's happening. So anchor in the midst of the storm. This is the last part of the presentation, and I apologize, probably going a little longer than I normally would, but these are important days to be communicating with our clients. First of all, stay focused on the playing field. That's what we're doing. We're focusing on the companies, the businesses we own, and what's happening in the real world. Panic is creating amazing opportunities. So we've seen massive liquidation in companies. We've seen companies drop on average 50%, even though the indexes are down about 30%, the average company's down even more. And so this is giving us really great opportunities to enter the market. But again, we want to do it carefully, selectively. In my view, the market could still go down another 5 to 15%. We could see a 50% retracement from the highs. That's what we saw in 08, 09. And so we want to be careful, and we want a dollar cost average at the very best prices we can. Disciplined value approach. What matters? Valuation risk, which I've listed here on slide 17, quality risk, and then portfolio risk. We're trying to manage all three of those risks, and you can look at those at your leisure as we're creating portfolios and trying to buy companies at the very best prices. So just a couple of slides here. Most people know that I'm a Christian, and I have very strong values, very strong worldview in terms of how I look at the world. And that influences, again, my discipline, my focus, my patience, my ability, hopefully, to not panic and to stay focused on the things that really matter. And so I've got a couple slides here just to challenge all of our clients. Regardless of your faith and your background, I want you to start thinking about some of the bigger picture issues here that's things like the coronavirus and situations like this, force upon us. And this can be a good thing too. So a couple of points here, slide 18 as we get close to the end here. There is no such thing as a maverick or chance virus. Okay, from my perspective, humans are more than just mere matter in motion, randomly thrust into a meaningless and chance universe, which is what they taught me at university, which I didn't believe. But as I did my science degree and they talk about theory of evolution and just chance world and so forth. I mean, look, people, we are meaningful, significant creatures, and we've been created by God to be put in this world, to make a difference and to add value and to honor Him. And so the third point here, I say the whole universe is under the sovereign control of God, an infinite and personal God. We don't live in just some random universe that's spinning out of control. It can look like that sometimes, but that's not my belief. And I believe that we live in an ordered, structured universe, and we are here to make a difference and to add the value in terms of all of what we do, and to do that with ethics and honesty and integrity, and never with panic, but with focus and discipline. And so fourth, God is described beautifully by Jesus, and I have a passage right at the end here, as our Heavenly Father who cares for us. And this is very important, that we have a Heavenly Father who cares for us, even in adversity. And sometimes we don't even see it as well as we should until we get into adversity and we start to focus on the things that matter. On the next slide, 5, we do not determine the length of our days. We ultimately have to entrust ourselves to God and His care. People who think they control their days on this earth, you're naive. We find out that when things like this come along, or there's accidents, or cancer can come upon us, different sickness, we don't control as much as we think we control. But the good thing is God does. And so we entrust ourselves to Him. And that gives us tremendous confidence to go forward each day. We focus on what we can do by taking personal responsibility, and then we leave the outcome to God. And so we must be people who take personal accountability, responsibility, but we also know at the end of the day, God is in control. He does all things right. All of us must face the reality of our own mortality. This is also very important. None of us are going to live forever. And so something like the coronavirus, and we see this pandemic spread, and we see the heartache and the difficulty that it creates, it's a reminder of our own mortality, and are we prepared to die? And where are we going to go? And what's our worldview? We need to be challenged in that way, and not to just put that off as if somehow it's never going to happen. It's inevitable. It is going to happen. And so that's important. Our confidence must be in God, not government, or we will sacrifice our freedom and dignity as a people. And I point that out that, look, we're thankful for our government. We need strong and able governments. But our ultimate security is not in Ottawa or Washington or some other center where the governments are located. And if we don't want to give up our liberties and freedom and our human dignity to governments. And so it's very important when we go through a crisis situation that we work together, but we work as human beings together, as a country, as a nation, but not surrender so much of our independence and sovereignty to the government. Our ultimate faith and trust must be in God. I have this last slide here, these few verses. Some of you will recognize this from Matthew 6, from the Sermon on the Mount that Jesus delivers. And I think it's a wonderful passage that reminds all of us from all different backgrounds, again, of what we should really focus on in terms of the challenges that come upon us in life. And so let me just read this, Matthew 6, 25 down to 33. Do not be anxious about your life, what you will eat or what you will drink, nor about your body what you will put on. Is not life more than food, and the body more than clothing? Look at the birds of the air. They neither sow nor reap nor gather into barns, and yet your heavenly Father feeds them. Are you not more value than they? And which of you, by being anxious, can add a single hour to the span of life? And why are you anxious about clothing? Consider the lilies of the field, how they grow. They neither toil nor spin. Yet I tell you, even Solomon in all his glory was not arrayed like one of these. But if God so clothes the grass of the field, which today is alive and tomorrow is thrown into the oven, will he not much more clothe you, O you of little faith? Therefore do not be anxious, saying, what will we eat, or what shall we drink, or what shall we wear? Your heavenly Father knows what you need. But seek first the kingdom of God and his righteousness, and all these things will be added unto you. It's about priorities. This is all about priorities, making sure our priorities are set. And so I really want to encourage you, set your priorities correctly. And then all of these other things will be put into perspective. It will be able to react, respond, and behave with wisdom and prudence. And we'll be able to weather through this time of adversity and challenge. And knowing that we have a Heavenly Father who does care for us, and we need to entrust ourselves to him. I love that expression, those few words in there that says that even Solomon, remember Solomon? He was the third king of Israel. He was a man of wisdom, and probably if you took his wealth as a percentage of the global GDP at the time, he would have been the wealthiest person that's ever lived in terms of controlling the global GDP. Obviously, it was smaller in his day, but tremendous wealth. And he had the best of garments, the best of clothes. But as Jesus points out, the flower that grows in our pots and around our house, and the flowers that we have in the areas that we plant, as they come up, they have more beauty than Solomon. And they just come up and then they go, they die. And if God cares for the flowers, he cares for us. So as we go forward, yes, this is going to be challenging. Yes, we're going to have to focus on fundamentals, keep our heads down. I think there's some wonderful opportunities in the marketplace. We're not going to jump in with both feet tomorrow. We're going to just nibble away, be careful, keep cash reserves, and be very, very prudent in terms of allocation of your assets. And so I wanted to give that quick update. I want to encourage you to stay focused, not to panic, but to have confidence and to move forward. Riveted in our confidence, ultimately not in ourselves or in government, but ultimately in God and in what he's doing in our world. And so I wish you the very best. If you have questions, call, email. We are going ahead, full steam ahead, and looking forward to the next number of weeks. They're going to be challenging, but we'll see our ways through that. And we'll look forward to what comes after this in terms of opportunities that will emerge. Thank you very much, and we'll speak soon. And thank you very much for your support. Bye now.